All right, so to get us started, this is a interesting question here that we have here. It looks like we have multiple anaSuperTrend indicators on the chart here, and looks like the trailing stop number one here, the one that's closest to price, is the one that's kind of being used as a phantom stop line here. And so as the explanation shows, if the tail of the bar touches the indicator, we don't want to exit the trade as right there. The trade's only wanted to be exited when the close of the bar actually closes, beyond the indicator plot as shown right there. So what that tells us is that the stop loss is not literally following the trailing stop number one, right? Obviously, the stop loss can't follow that. The stop loss would be following back further. Either it'd be following, trailing stop number two, or maybe trailing stop number three. And then once price closes beyond trailing stop number one, right, the closest one, then the stop loss would get moved automatically, basically, to market, right? So you just have to take your stop loss and just move it to market and get closed out at a market price, instead of getting closed out at that indicator price. So, all right. So, so I have a chart here set up, ready to go, and I've, finding a nice setup like this was, just wasn't happening on oil. Maybe I could scan through some other instruments and find something, but I did find one spot a few days back on oil here to help illustrate here. So. Like right there's an example here. So, and let's see here. So to kind of recreate this screenshot, let's open this up, take a quick peek. So one of the anaSuperTrends, its offset multiplier is the standard 2.5, which is the outer one. And then I have a second anaSuperTrend, and we can see the offset multiplier I just set it to 1.5, so therefore it's a little closer, right? So that's the settings I'm using for my example here to mimic the screenshot. So what I'm going to do is we're going to have the stop loss trail the outer indicator, and then we'll have BlackBird monitor the inner indicator, and when we do actually get a close on the other side of the indicator, then that will become the triggering mechanism to close the stop loss. Well, not close, but move the stop loss to the market price. All right, so that little spot there, so that's, I'm just identifying that, if our stop loss was trailing, right, the inside indicator, right, the stop would get hit, but that's what we want. That's what's wanted to be avoided. So the stop loss is actually wanted to get triggered when there's a close actually below the indicator there, like there. So, all right, let's get BlackBird open. And so I'm just going to start off with a market entry because that's not what we're focusing on. We're focusing on the stop loss. So for the stop loss, so what I'm going to do is I'm going to start off using the parabolic SAR trailing. So this is parabolic SAR as an indicator. So I'm going to start off using an indicator based stop loss, with trailing. And what I can do is then just go in and replace the parabolic SAR. All right. So let's go put the anaSuperTrend in its place. All right. Now, the stop loss is going to trail, right, the SuperTrend that's on the outer edge there. All right, so just to re-emphasize, let's pull up the screenshot again. Guess let's close this out. All right, so if we go back to this screenshot, right, there's 3 trailing stop indicators here. So the stop loss is going to trail, an outer indicator setting. It's going to trail the indicator setting that's further out from price. All right, so that's where we're going to set the stop loss. So I guess you could say that the stop loss is going to follow the trailing stop number 2, right? This one that's slightly further out. Right, and so that's going to be this anaSuperTrend that's further out, right? And so when I go into the indicator settings, right, here's our anaSuperTrend. So the offset multiplier 2.5, that's going to be this outer one here, right? And so that's where we're actually going to place the stop loss. Yeah, I guess we'll make 2 versions of this. So, okay. And then going into the trailing actions. So instead of trailing the parabolic SAR, we'll switch this to the anaSuperTrend. So we'll just go into actions, right? We can see instead of moving the stop loss to the parabolic SAR, we're going to replace that parabolic SAR with the anaSuperTrend again. There we go. All right, and again, so for the trailing, we're going to trail the outer anaSuperTrend, right? And that's using an offset multiplier of 2.5, right? So these are standard. I'm just using the standard settings here for the anaSuperTrend. All right. So we actually have the stop loss set up and being placed. So now the next thing we need to do is set up another trailing rule that's going to monitor the inside anaSuperTrend line here. Okay, so let's create a new rule. And let's see, what should we call this? I'm not sure. I'll give it a name later on here. All right. So we're going to use a trigger event here. And we're going to use price versus indicator. So that's actually what we're literally doing. We're comparing price versus the anaSuperTrend. Right, so we're going to compare price. Well, our arrow on the right here, yeah, we're going to compare price and see if the closing price of the bar actually closes on the other side of our indicator there, right? So, there we go. Indicator A, that's going to be the closing price, and indicator B, that will be our anaSuperTrend. Here's our anaSuperTrend. Now this time we're using the modified anaSuperTrend, right? So the offset multiplier is 1.5, right? So this inside anaSuperTrend has a 1.5 offset multiplier there. All right, and let's just make sure we have our equations correct. So if we're in a long trade, when the closing price goes below, let's see, so for long, A is going to be below, not above. All right, so let's put this A is below. So remember, A is the price, B is the indicator. So if we look at the chart, A being the price, so the closing price is going to be below the indicator. So A is below the indicator. And for the short, that's just going to be the opposite. So we'll just switch that to A is above. All right. So we have our, our comparison set up, and now the action here. Actually, we'll just use the default action, which is we're going to move the stop loss to the last price. Basically, that's the market, right? The last price inside of NinjaTrader is the current market price. So there you go. So that'll just move our stop loss, right into the market price, and we'll get closed out, at wherever the market price is. All right, and the repeat, well, there's no repeat for this. Once you move the stop loss into the market price, you're out of the market. So there's no repeat. That only needs to happen once. So let's see. Let's kind of come up with a rule here. Let's see, close. It's kind of tough coming up with a short little name for this guy. All right, so exit when the indicator's crossed. There you go. Something. We got something in there. Let's see. All right, yeah, so that is it. So this guy right here, this rule that we made, that is the key right there. So this trigger on price versus indicator, that's the key, right, to getting this all to work. So we're comparing the closing price to the indicator, right? And it's the indicator that, the indicator settings of the inside indicator, whereas the stop loss is actually going to trail the indicator with the other settings further out. So let's have some fun, and let's go test this theory out, see how it works. Let's see. And let's go to the chart. Let's see. All right, so it's going to take a moment to kind of get set up here. So we need to get price to cross the inside anaSuperTrend here and get that anaSuperTrend to flip on us. So the outside anaSuperTrend is in a long trend here. All right, well, we'll just give this a moment. Just take a little sip of your coffee while we're waiting on price to get up there so we can get ourselves in position. All right, there we go. All right, now let me pull the market down here a little bit. Okay, so with that, let's see, let's go long. All right, so there we go. All right, I'm going to close out one more bar a little higher up to try and get the inside anaSuperTrend to get a little closer. All right, now we'll bring price down here. All right, so as we're waiting for price to come down here, I'm going to slow the trend down a little bit. And so, and just kind of give some options here. So, this is one way to do this. Actually, where you're actually using a stop loss, as a protective measure, and in case some kind of crazy market news happens, at least you've got a stop loss out there. Now, there is another way to do this without a stop loss. So let's say you don't actually want to run a stop loss, right? You just want to be, as they say, naked in the market without a stop loss, protective stop loss. There's another way to do that where we could use a Bloodhound signal to close the trade out instead of using a stop loss. And well, okay, I guess I was going to try and show that, but price is really close right now, so let's get, I guess we'll just get price down here. So we'll generate a wick, that's going to break the inside anaSuperTrend line there, but not get stopped out. All right, now I'll pull the market up. All right, and there we go. There's our example of how we can do this while keeping a stop loss in place as a protective measure there. So I'll just set the trend on neutral there. And let me kind of show some other options that we can do here. I guess first let me save this. So let's save a file for today. All right, so there we go. So we're gonna. So this is basically a stop loss exit on price crossing an indicator, something like that. Okay, so there we go. So we got this saved here. So we got a file for today's workshop. So now let's go into take a look at some of the other possibilities here that we could do. So as I was saying earlier, let's say you don't want a stop loss, right? You just want to wait for price to cross your indicator and then just exit the trade, right? And so if we wanted to do that, well, let's see. If we wanted to do that, actually, yeah, that would be, so there wouldn't be a stop loss. So we'd actually have to use a Bloodhound signal. Let's see. Could do it with a profit target. Yeah, setting up a Bloodhound signal I think would be the best way. So instead of using an entry signal, we'll turn that off and turn on the exit signal. And so you would just build a Bloodhound exit signal, and have Bloodhound, generate an exit signal when your price crosses your inside anaSuperTrend indicator, and just and set that up in your exit signals for the Bloodhound signals there. Right, and that's one way you could do it, right? So the exit signals, that doesn't use a stop loss. That just sends a close order to the market, right? And so no stop loss is needed that way, right? So you could just have your profit target without a stop loss there. So. Yeah, so that's that's another option there, and if we really wanted to get bizarre, let's say all you want is a profit target, then we could go into our trailing rules for a profit target. Create a rule here, and kind of like how with the stop loss we used a trigger to move that stop loss to market. Well, we could use a trigger, and in this case it would be with the profit target we could use a Bloodhound signal, or we could use this. We could set up the same price versus indicator. We could set up the same rules here, you know, and look for this, you know, same exact condition as the stop loss, but then also move our profit target to the market, and basically use our profit target to get taken out instead. Although if you're using a profit target, that's a little trickier, right? Because profit targets are limit orders. So, you know, if price is just moving down pretty fast and, you know, crossing your indicator, you know, your profit target may not get filled. So as a precaution, you may just want to, you know, take your profit target and drop it down a few ticks, you know, past the market, a couple of ticks past the market, just to kind of make sure that your profit target gets filled at, you know, wherever the market is. It's here. So, you know, depending on the volatility of the instrument you're trading might depend on how far down you might want to go. You know, I would think in a typical market, five ticks below whatever the last price was should be sufficient to get your profit target, you know, below the market, and then the profit target would get filled at whatever the best price is of the market. So it's kind of converting your limit order into a market order by pushing it, you know, beyond the market, beyond the bid and ask. So, yeah, so there you go. It's kind of another way to approach this, a little more bizarre way, but possible to do it that way as well. All right, guys, have a good weekend, and hope to see you guys next week. All right, bye-bye, guys.